Afgri's half-year headline earnings per share dipped 17% to 37 cents, brought on by tough conditions in the foods market and low grain storage volumes. Joining me in studio to discuss the group's performance is Afgri CEO Chris Venter. A very warm welcome to you. We did see commodity prices rising, and we did see prices on some foods, particularly maize, that going up, but that didn't seem to offset a lot of the challenges that your business faced.
Yeah, the benefit of a higher price obviously comes through our retail and equipment business. So you will see there the farmers in a position where he can spend more, and as a result of that you will have that benefit. The counter side of that, unfortunately, the price is normally higher as a result of lower volumes. The grain storage business is quite a big part of our profit. So we've seen a 37% drop in volumes end of December to December 2010. And as a result of that, you will see the reduction in our income from the storage business. The high maize price also have a negative effect on the margins on the food business. So your raw material obviously high, and as a result of that, you have put more pressure on margins.
On the volume side, though, I'm hearing from some people that it could that know the sector quite well are saying that it could be better this year. Yeah. Do you think it's going to be better this year?
Certainly, projections in terms of the crop that's on land at this point in time seems positive. Indications are 11.7 million tons, which is about 16% higher than last year. It still remains to be seen though, because we still have the crop on land. We have some rains. We need some rain in the next 6 to 8 weeks to just confirm that we have that size of crop. So I think from a weather point of view, next 6 to 8 weeks will confirm that for us.
But it also seemed as though there was some confidence from farmers. I know that last year, first quarter, it seemed as though there was a record number of confidence, or increased level of confidence compared to the previous 3 years. And that probably seems to, looking at your results, seems to have fed through into farmers buying more equipment. Do you see that trend continuing?
Absolutely. I mean, the farmers at this stage really, for them, they should have a good result from the higher maize prices. Some of the farmers still had some crop end of last year in the first quarter, as you mentioned. So that obviously was good for them as far as their balance sheet is concerned. And having that benefit, that will pull through to the tractor sales. And we've seen that in terms of our own tractor sales for the period. Your
poultry numbers did not look very good, and you say that that's a sector that you're really looking at right now, particularly with management, and also looking at some of the inefficiencies in that sector of your business. Tell us a little bit about what you're planning going forward.
The poultry is really, it's a combination of the external factors, and then also we had some internal efficiencies that we need to get through from a volume point of view. We sit with one fairly small plant at 350,000 broilers per week that we are looking at expanding and making sure the balance of the business is correct. The rest is really just making sure that you have all the efficiencies aligned with the external market. So it is something we're very happy with being chosen as a preferred supplier to KFC and to Yum. So that is something that we will certainly focus on in the coming years. From a business point of view, is really making sure that we can reflect the market, and I think that is our focus.
One of the things that we are seeing coming back to the market is the health of the Zimbabwean economy, and you're expanding operations there. What opportunities are you seeing? And one of the things that has obviously this is one of the things that impacted that economy so much was what happened to the agriculture sector. What opportunities are you seeing though?
Look, just purely looking at the tobacco industry in Zimbabwe, you can see an uptick in terms of activity. I think they've turned at the lowest part of about 45 million kilograms, and they're back at about 100 million kilograms. So that gives you an indication that the agricultural activities are back. Certainly over the last 18 months since we've been there and negotiating there, we could see a benefit going forward. The 49% that we've taken in terms of John Deere agency has been brilliant for us. We sold 25 tractors since August to end of December, and even January, February were positive for us. So from activity point of view, we'll certainly look to expand in Zimbabwe. I think one needs to be cautious, not investing too much in terms of brick and mortars, but certainly from a from a business point of view, we will start to grow there.
What is quite interesting in the past 2 weeks, particularly, there've been so many stories about investment in Zambia, and that's not a country you hear a lot about. You're also expanding in that country. What are you seeing there, and what are you going to focus on? Because your business does have a lot of different arms in your business. So what are you going to focus on in
Zambia specifically? We focus on the agricultural side with a little bit of financial services. Agricultural, there, we do support the farmers there. We have a strong commercial farming base in Zimbabwe that we support. We created a structure together with John Deere and IFC to support the emerging farmers, where we can actually supply equipment to them, which actually helps them to grow their own yield. So our focus there is really to make sure that we, around the farmer, whether a small farmer or a commercial farmer, we support them, that we grow the production base. And as a result of that, also be able to grow our own capabilities of importing or exporting the product. And we were able to export quite a significant amount of Zambian maize into South Africa this year.
Now, there was that successful conclusion of the sale of the farmers' debtors book to the Land Bank, and you said that contributed. Such transactions wasn't the only one, but such transactions also contributed much to the strength of your balance sheet.
Yes.
And it seems as though a lot of that cash that you have now is going to go into building that financial services arm of your business. Why is so much of the focus in that particular part of your business?
Yeah, mate, just to correct, we're not really looking at building the financial services from a data point of view. What we have done is we strengthening the balance sheet. We were historically a company with high debt levels on the back of the debtors that we finance. So we have entered into a phase where we want to strengthen the balance sheet, and as we strengthen the balance sheet, we want to invest further in our other operations on the food sector, but also on the storage capacity side. The financial services side is really a business that we've converted the business model into a fee income driven business model, and as a result of that, we see expansion in that business coming in the future. So it's really just making sure that we have all the ends aligned to support the business in general.
Thank you so much for joining us, Chris. That was Chris Venter, he's CEO of Afgri.